our YouTube channel and on Facebook, and saying a very good morning to Mr. Nico Kleynhans. Good morning, sir.
Good morning to you and to the listeners.
Thank you so much for your time. So the question this morning is, if the repo rate keeps increasing, how are we going to survive? Now, before you answer that question, let's just clarify. Repo rate, that's got to do with loaning money, and it's the rate set by the Reserve Bank of South Africa. In other words, it's the repossession rate. So that's a figure that we can talk about, and it is that thing that influences the home loan that you have, the other debt that you have, and the repayment of that. So how are we going to survive with this repo rate that seems to increase regularly?
A lot of people are wondering whether because we've had a lot of repo rate increases in the last year and a half, 2 years. And people, because we have short-term memories, we tend to remember the last 2 years. We don't remember the last 4 years.
True story.
So for many of us, we get this feeling that the repo rate's going to keep increasing. And every time it increases, your credit card interest rate increases, your home loan increases, your car loan increases, every single debt that you have increases. And for many people, it's now getting to the point where their budgets can no longer cope. Not because they've got new debt, but the existing debt is now beyond their capacity to manage. And people are in a sense of panic. And now they're saying, how do I cope? How do I make sure I don't lose my home? How do I make sure my car doesn't get repossessed? How do I make sure the bank doesn't get nasty and shut my credit card down? Those are real questions. Those, in fact, is an excellent question. So let me just explain how the repo rate works. The Reserve Bank uses the repo rate to control inflation. It is the only tool that the Reserve Bank has to control inflation.
Because we never want to go to a situation like where Zimbabwe had hyperinflation. So that's why they have to control it.
And will destroy the economy.
Yeah.
Now, the problem is the governor of the Reserve Bank, by definition, may be using English when he explains things. But that doesn't mean he's using a language that 99% of South Africans understand.
Okay.
So he can explain as much as he likes. But the average South African at the end of that conversation tends to be more confused as they were when they were in class listening to a mathematics lecture. It's the same kind of problem.
Yeah.
And this leaves us more confused than we were before. All he's trying to say to us is that inflation has a band. It can't be below a certain amount. It can't be higher than a certain amount. And if inflation is outside of those parameters, I have no choice. I have to increase the repo rate, and I must keep doing so until inflation reaches that particular band of what is allowable.
Yeah.
So as soon as inflation reaches that particular band, I will slow down on the interest rate increases. And eventually, the interest rate, the repo rate, will actually go down. So if you can see this as good news, the interest rates are unlikely to increase beyond this year.
Okay.
It will not only slow down, it will probably stop. So that is the good news, because inflation is slowing down and it is reaching certain bands. Now, how we know that is because we look at the stats. Food inflation is already on its way down.
Okay, that's
we
good.
can see that. We look at the meat inflation. We look at the food inflation. We look at all kinds of inflations. Now, some of that inflation we can control fairly easily. Some of the inflation we can't control. What happens to Eskom, we can't control,
Hmm.
but it does affect our inflation rate.
It does.
Now, there, one of the good news is that are coming through is government is now considering removing the taxes
On
of
the
diesel prices.
Yeah, that's a big, I really hope they
That
do that.
is going to filter through to the inflation rate. It's going to reduce it because it's going to reduce all kinds of other costs. Now, the cynics say that costs never come down. You're allowed to believe that if you want to. I'm not one of those people who believe that. I genuinely believe it will affect the prices and it will bring the prices down. But what some people are asking me is, should I not fix my home loan rate so that when the repo rate goes up, it will protect me? It's like the horse is already bolted.
Okay.
Because if you now go to the bank and you say, I want to fix my home loan rate, they will say yes, but they will now increase your interest rate by another 2 percentage points.
Yeah, to protect themselves.
To protect themselves. And since the repo rate's not going to go that high, you're kind of wasting money. It was too late to go and do that. So that's not really a good idea.
Okay.
The other question I get fairly frequently is, I've got an outstanding car loan and I can't afford it right now. Should I not use some of my home loan money to pay off the car loan, because my home loan is a lower interest rate than my car by 3 or 4 percentage points?
Yeah.
You can do that. It's probably a good idea, provided you're aware of one important thing. Your car loan may have to run over another 2-year period.
Okay.
If you use your home loan money and you now take what effectively is a 2-year loan and you now run it over 10 years because that's your home loan, you're not saving money.
That's right.
Then you're sitting on the bed and tearing up another 100 rand every night. That's not worth it. So provided when you do switch over using your home loan money, you keep the term down to the 1 or 2 year period, you can save money. Then it is a good principle, but you've got to remember the term. So the good news is the repo rate won't continue going up. It will come down. It's a factor of inflation.
Yeah.
It's not only bad news that will never stop. If you have debt of credit card that is 4% above the repo rate, or if you have a money lender debt, which you should never have anyway, and you have spare capacity in your home loan, you can use that to reduce your ultimate debt. But you've got to watch the term that you're now changing the loan. But yes, then you can save money, and it does become a good financial planning principle.
Nico, thank you so much. Some great advice. And once again, ladies and gentlemen, be careful. Be careful, be wise, and rather tighten your belt now and live a little more frugally, because we don't know what the future holds, but we do know who holds our future.
Sure. Thank you.
Thank you, Nico.